Hi there, Miranda Alt here with Keller Williams Success Real Estate and the Miranda Alt team with your Monday market update for Monday, June 26th, 2023. Thank you so much for watching. Of course, it is Tuesday, June 27th, but I was traveling yesterday and spent most of my day at the airport trying to get on a plane and then sit on the tarmac and then eventually take off and fly home to Chicago. So thank you for watching today, Tuesday, June 27th. Taking a quick look at our numbers from the last 7 days as of yesterday. I did pull the numbers yesterday. We had 139 new listings in Mchenry County. We had 150 go under contract. So once again, more homes going under contract than newly listed. We had 85 closed sales. We have 40 price changes, 1 expired and 61 on the private network. So what are we seeing in our housing market right now? Well, we still have incredibly low supply and very high demand. We are not seeing demand taper at all, even with higher interest rates. So it is the last week of June, and as we know, the Feds met June 15th and 16th, I believe it was the 15th and 16th, and they did not have a rate increase in June, but all reports are pointing to the Feds doing yet another 0.25% increase in the prime rate in July. Now that meeting is not until July 23rd and 24th. I think the holiday is pushing that back a little bit later in July. So we will see what interest rates will do after that. Now remember, when the Feds raise the prime rate, it does not directly affect mortgage rates. When they raise the prime rate, it's increasing the rate at which money is loaned and traded between the banks and the federal government. So that's really the only control that the Feds have to fight inflation. And right now, even though we're having reports showing that we have, the jobs numbers have been pretty strong, the CPI numbers have been strong, we know that inflation is coming down, but it's not coming down as quickly as the federal government would like. They are targeting that 2% rate, or the rate of 2 for inflation. And that is just, so what most economists are saying is that that's pretty far out of reach and that we're not going to get there as quickly as the Feds want. So they're going to keep trying to raise these prime rates, and it's going to, what's happening is they are actually impacting supply more than they are impacting demand. Because what we know is that over 70% of American homeowners right now have an interest rate of 4% or lower. So those people are very, very much so not inclined to move and get a higher rate, especially if that rate is going to be near 7%, which is what most people are looking at right now. So we are having a big supply issue. So by the Feds increasing the mortgage rates, or increasing the prime rate, which thereby has been seeing the mortgage rates increase. Over the last 12 months, we've seen interest rates climb double, over 3%. So they are double what they were last year. So that is the largest increase that we have ever seen in history, the fastest increase we've ever seen in history of interest rates. So that is encouraging more and more homeowners to stay put, stay where they're at, don't buy that bigger house, because they don't want to have that higher interest rate. So that is affecting our supply more than it is our demand. Now, what the Feds do not understand is that homeownership is largely driven by life circumstances. It is not driven by interest rates. That is not what drives the housing market. Job changes, death, marriage, divorce, kids, first-time homebuyers. Those are the reasons that people move. And so demand has not been curbed, but supply has been greatly impacted, because those people who we rely on for supply, meaning people who are going to upsize, they're not necessarily taking inventory because they're selling one house and buying another. Those people we're not seeing move as much as we need in order to have more supply. So what's happening is we are seeing home builders are having the largest margins they've had in a very long time. So we are seeing more people buying new home builds, which is great. That is more supply, but the builders are not able to build fast enough to meet the demand. So we are still seeing prices increase. Prices are still going up across the country. I know in May we saw a 0.6% increase in prices across the whole country. I've seen prices going up around here. I know all of my listings are still selling for multiple offers in 4 days or less. What's typically happening, even the reason why they're not selling in 1 day, is because those of us agents who've been in this for a while now, we've learned how to navigate this situation. We're helping our clients figure out how to sell their home prior to finding their next home so that they don't have that home sale contingency, or we're helping them get pre-approved to carry both mortgages for a time period so that they can buy their next home and then list their other home. But what we do is we list a home typically on Thursday. Thursday seems to be the best day to list a home. We list it on Thursday. We let showings happen Friday, Saturday, Sunday. We call for highest and best by Sunday evening. We make a decision on Monday. That's just pretty much how we do things now. It's pretty much standard. That's what I did with my last listing. We listed it on Thursday. We had multiple offers by Sunday, under contract by yesterday. And that's just how we're learning how to navigate this time. So it's helping our clients, but we're really still seeing a very, very big discrepancy between supply and demand, which is making those prices continue to go up. So while the feds are trying to fight inflation by raising the prime rate, again, not directly related to the mortgage rate, but it still does affect the rate at which mortgage-backed securities are traded. So therefore, the mortgage rates do tend to go up when the prime rate is raised. Although for the last 2 increases that the federal government has done, we have not really seen a big change in the mortgage rates. They've pretty much been in the 6s for almost the entire year. We have not seen them do a whole lot of fluctuation. Yes, they've gone up and down some, but it's not been a lot. They've been pretty stagnant in the 6s somewhere. Now, if the feds raise again in July, some people think that that might bring interest rates down, showing a positive response to inflation and hoping that traders will see that as a good thing, that they're trying to fight inflation, and hopefully mortgage-backed securities might trade at a little bit higher rate, and maybe we'll see those interest rates come down. There is still speculation that we will see interest rates come down into the 5s by the end of the year. Let's hope. We haven't seen that happen yet. I know one of the things that I've been talking to people about is now is the time to buy a house, because we do have very low supply, but there are still nice homes that hit the market. I looked at 2 beautiful homes today, great properties. They're gonna sell fast though. They're not gonna be on the market very long, so people need to get ready. And I would buy now, because what is gonna happen in November and December if rates do go into the 5s? All of those people that have been sitting on the sidelines are going to re-enter the buying market, and those prices are going to go sky high. So what you're better off doing now is get a home under contract now, get it locked in at a 7% rate if that's what you have to go through, and then refinance. Because what most people who are still buying right now, they don't love the rate that they're going to get right now, but they know they're going to be able to refinance when rates come down. So that is the good thing to keep in mind. And we're very lucky in this country that we get to do that, because in other countries they can't. Once you're locked into your rate, you're locked into your rate until you move. So those are some important things to keep in mind of what's happening right now in our real estate market, that we still have very low supply. We have very high demand. You know, the dream of home ownership by, first-time home buyers, it's still alive and well. And we have a lot of first-time home buyers out there looking to get their dream home. And they know that the interest rate is high, but all of their parents have told them, hey, when I bought my house, it was 16%, because that's true. We had a lot of people who bought houses in the 90s or the 80s when rates were in the double digits. They were 10, 13, 16%. So just keep in mind that increasing mortgage rates is going to hurt supply more than it is hurt demand. It just doesn't work that way. So hopefully the interest rates will come down. Demand is still high. We still have a lot of people who are very happy that they are closing on their homes. I've got closings last week, this week, and all of these people are very, very happy with their choice. So I'm Miranda Alt with Keller Williams Success Real Estate. Thank you so much for watching. Have a great rest of your week. Bye-bye.